Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pumpiness on the Bitcoin chart as well as in the altcoin market. Guys, if we just jump straight to the charts, we can see that we did have a nice pump from the mid 30,000s all the way to 31,000, almost 200. And just for some truth in advertising, just for some transparency, let's go ahead and go over some recent, momentum pools and volatility pivots that we did put forward on this channel. And so let's start with this 1 hour over here. And as you can see, of course, this one had a very slender momentum pool, but that's no big deal. What happened is that we could see that we were underneath the momentum pool, and while we were underneath that momentum pool, we actually did have some bearishness, and we lost the bearish control zone, and we did get that kind of flash wick to the downside. Now bulls did defend it, we retested it, bulls defended it again, we retested the neutral point of control once, twice, three times, four times. We were finally able to flip it, got above that momentum pool, was able to capture the volatility pivot, and then in retesting the volatility pivot, we just took off, having passed through the bullish control zone. So in the case of the 1 hour, the 1 hour was serving us pretty good. And again, guys, you can use these charts from a couple days ago. They don't just like automatically expire. They do start to degrade a little bit, but overall you can see that they do hold up. And the key point here is, I think, the volatility pivot, okay? If you pay attention to the volatility pivot right here, we never really caught it. We retested it bearishly, okay? That ended up in a drop. But when we were able to recover out of the bearish control zone, and when we were able to recover out of the neutral point of control, then we were able to capture that momentum pool, and we were able to retest the volatility pivot positively. And so this is the story of Bitcoin. This is the story of trading, and you can tell that story straight from my key levels here. It's almost like your grandma is telling you a fairy tale, and these are the good guys and the bad guys, okay, depending on which team you're on. And we can just see what was the adventure that they took. Now you can plot that in your mind's eye in advance if you have my key levels. So guys, let's go ahead and jump to another example here on the 6 hour. So I'm just going to show you the 6 hour chart, but we're still going to be on these 1 hour candles just so you can get some detail. And here you can see that, of course, the 6 hour had a much fatter momentum pool. The momentum pool is always between the two green lines, okay, guys? And so here you can see it wasn't accepted into the momentum pool. It tried to get through the momentum pool. It broke down. It held at the volatility pivot on the 6 hour, and then it was able to push through the pool, played with the general continuation, came back to retest the pool, and then when accepted and accepted by the general continuation. And what do we mean by acceptance? We mean that we put a couple candles and it held. Okay, it put a couple candles and it held. Not it had a wick and then it got like sent back down. Okay, it had to hold, and then we just ended up flying. And you can see currently we are on top of that bullish control zone. In fact, you can see that we came back to retest the bullish control zone, and we're still holding it. So according to this old, 6 hour chart, we are performing quite bullishly. And if you guys just want to consider the story of Bitcoin, this is how you can see that we needed to capture the volatility pivot, right? We needed to capture the momentum pool. And once we were on top of the volatility pivot and once we were on top of the momentum pool, yeah, we could just fly, right? And likewise, being underneath the momentum pool, being underneath the volatility pivot, we could just dump. okay, in a very scary fashion, right? And so here we just flew in a very awesome fashion, and here we just dumped in a very scary fashion, and that's what you could have predicted from these volatility pivots and the momentum pools. Now, nothing's 100%, but you can see that this system works pretty well, and it doesn't matter if you're on the 1 hour or you're on the 6 hour. They're going to have slightly different adventures because you're going to have way more candles on certain time frames than others, but the story is generally going to be the same, and it's going to be a success story for you as long as you're paying attention to these key levels. Guys, let's go ahead and throw on the daily and see what the daily was like. Now, this would have been a few days ago, right? Or maybe a couple days ago. And what we saw is that we first, came up. We kind of just stuck our toe in the momentum pool. That was a little bit of a fake out. It usually happens when we have a change in our momentum, right? We were coming down onto the pool. We usually have a little bit of a fake out here, but we ended up putting in a higher low, and so you could tell that that was likely to be a fake out because this was a momentum from the upside, and so that was likely to be a higher low. You just could have protected yourself a little bit, but what happened is that did end up being a higher low. We did end up holding the momentum pool, right? And yes, there was some scary news, right? I think this was the wick for the ETF thing, right? The ETF got rejected temporarily, and so there's a little scary news. It crossed the pool, and then it still held, right? It still held, and then what happened is we captured the volatility pivot and the general continuation, and having just proven that, we were able to fly. So again, like on all of these time frames, the 1 hour, the 6 hour, the daily, you can see the story of Bitcoin, right? On my key levels here. Right here is where the price action is happening. Right here is where the price action is happening. Right here is where the price action is happening. And you knew that was going to be the case in advance because you had my key levels and you marked them out back here. Back here, guys, after this dump, we marked out these key levels. I said likely we were going to take the stairs to the upside, and that's what we did. Guys, of course, we are currently above that momentum pool and the volatility pivot, so on the day, we're still looking pretty bullish. Now, one thing that we can do is check out the weekly because the weekly also had a closure. For this one, I'm going to jump to the daily just because the week's way too long of a period of time. And you know what? I think we can just go straight to the weekly. Why not? And if we see what happened on the weekly, you can see that these were the key levels that I gave you, right? A week ago, right? A week ago, I gave you these key levels. I said as long as we close above the hold momentum, we're going to be above the momentum pool. As long as we close above the volatility pivot, we're going to be uh, biased to the upside. So above the pool, above the pivot, and look what's happening. We're just kind of pumping, right? Guys, now if we had fallen into the pool and we lost that bullish control zone, then we could imagine that we could easily swim down and test the volatility pivot. And if we lost that, we could easily imagine that we would swim to the other side of the pool. Whenever you enter the pool, sometimes on the first candle, it's a little bit of a fake out depending on if you're having a momentum shift or not. If you're having a momentum shift, there could be a little bit of a fake out because it's like the finishing move of the previous candles. Okay, guys, you have to understand that fake out that you sometimes get in the beginning is just the finishing move of the previous candles. Okay, we're now talking about the next candles, the next set of candles. So you have to wait for that play to just get positioned correctly. And but however, if you have a clean entry, a clean directional entry, and you're moving into the pool, then oftentimes you'll find that you just cross to the other side. And likewise, if you had been coming from below, like right here, right, then you would also find that you came to the other side of the pool, assuming that you had a clean momentum entry and that you weren't just, that you weren't just at a point of rejection or a point of inflection or something like that, that you had an actual trend. And so the momentum pool is what's the most tradable thing, whether or not you hold above it or whether or not you break below it right? And then when you're crossing it, all these other lines are just targets, okay? Sometimes they're up here, sometimes they're down here, and so it can just kind of scatter your mind a little bit of what you should approach to. But I think if we go ahead and let's go ahead and just jump down to the 1 hour, and let's put the old 6 hour on, just to give you kind of a just some food for thought. Mm, was this, let's see, was this pivot thick enough here? Or pardon me, was this pool thick enough here to be tradable? Yeah, I mean, it was. So let's go ahead and see here, right? So you can see that whenever we enter the pool, there's a good chance that we cross to the other side. What happened when we got rejected from that other side? We crossed the pool all the way down. You see this bearish candle? It went all the way down, right? And then what happened? We got above the volatility pivot. We just kept pushing up. We got into that pool, and what happened? We crossed the momentum pool completely. We even exceeded it, right? And so if you had taken this entry, you would have been successful. If you had taken this short, you would have been successful. If you'd taken this entry, you would have been successful. And then what happened? It came back down, right, into this red candle. So you taken that short, you would have been successful, right? And then what happened? It came back up. It entered the pool again. You take that long, you would have been successful. It rejected at the top of the pool. You take that short, it came all the way back down. That short would have been successful. You bounced back up. Look at this right here on this entry. You pushed all the way up here. That long would have been successful. You broke down. You entered the pool right here, and then that short would have been successful. You came back up, right? And you pushed into the pool. That long would have been successful. And then, of course, this was a bit of a fake out. You can see this was a pivot right here. It was actually pivoting off of the continuation line. That was a pivot. That candle never let go of it. But as soon as you got a candle that did let go, the body did let go of that next pivot up there, that next key level, then you did see that the price did cross all the way down. And so that short would have been successful. This long would have been successful. Now, this one was a bit of a fake out right here. So we got one fake out after like what, a dozen successful trades, but ultimately it did push all the way down. And so the short itself, the overall move was successful. And then what happened? The long that you would have taken right here as you pushed back up into the pool, very, very highly successful. Okay, so one fake out temporarily, and by the way, that move did end up being successful. One fake out, and then over a dozen successful trades. Now you can imagine this is kind of a thin pool, but you get to capture all the movement above it and all the movement below it, right? And so what you're really looking for is to capture this trade, right? You're looking to capture this trade. You're not really just looking to cross the pool. You're looking for your entries for the big moves, okay? And that's why I created this system. I hope you guys understand that. This is the transparency of my system. I just proved to you that it works, okay? That it works with an extremely high hit rate, and I didn't have to do anything but put a couple levels on my chart here, okay, guys? Let's go ahead and just see, of course, the new key levels, because those were the old ones. So let's go ahead and update ourselves as we are finding Bitcoin pushing to the upside. And here we go with the new charts, guys. Again, everything that we just saw was just review. It was transparency, full transparency for my viewers, truth in advertising. Here are the new key levels. As long as we are above 30,908 on the hourly, which closes in 17 minutes, I'm going to continue to have an upward bias. You can see that we have already crossed down into this pool. This pool has been filled. Okay, and so if we end up holding above 30,908, I'm going to continue to be biased in the upward direction on the 1 hour. And that's going to be especially true if we're able to capture the pool above $31,070. Okay, between 31,070 and 30,908. It's a little bit of an open question. Okay, we're just going to be swimming around in the alpha momentum pool there. But that is going to be overall bullish. Now, we can also see that that does reside above the bullish control zone. So bulls are firmly in charge on the 1 hour, and I don't question that as long as we're above 30,887. We do start to lose significant momentum under 30,826. We can kind of extend that to 30,782 if you want to go by the MACD. But overall, we hold the neutral point of control in the bulls' favor above 30,661. It's just that they don't have any special advantage there, and it could easily get snatched by the bears. But bears don't gain full control until 30,292. Now, this is a very tradable pool over here, guys. So respect the momentum pool, guys, and also the volatility pivot. Let's go ahead and update for the 6 hour, and for the 6 hour, you can see that we did get that pump, of course, off the pool. Just we had a spectacular pump this morning. That's all, but we got that pump. And we are going to remain having a bullish bias above 30,470. Under that, I'm going to flip my bias to the downside. We're going to remain above the bullish control zone as long as we're above 30,922. And of course, we've captured the momentum pool above, let's just say 30,675. Even though technically it's 30,625, the hold momentum and the add and lose momentum are like almost overlapping each other. So the real pool is like extremely, extremely thin. It's like this thin green line. It's the thin green line, man. Okay, and yeah, I mean, 30,621 is the bottom of the pool. So that's not a tradable pool, okay? But it is a line that you can cross where you can say, well, underneath it, we're losing momentum. Above it, we're kind of holding our step up momentum, right, to the upside. And so that's kind of how you can visualize what the pool is telling you right here, where, oh, okay, we're stepping down now, okay, right? So you're losing momentum under the pool. Okay, hope that makes sense. And guys, again, we are going to continue to just be in the bullish control zone on the 6 hour above 30,922. So anyone saying this is a fake move, they got to look at that level, okay? Because above the bullish control zone, you can kind of get embedded there and you can keep doing nice things, okay? But overall, you would expect that it would get overheated in that area also, and if people just wanted to take profits, then we might come back and revisit the pool in those mid 30,000s or upper $30,000 area. And we don't lose the neutral point of control until 30,419. Under that, bears are going to have a little bit of an advantage on the chart, and then they take full control at the 29,789. Guys, let's jump over to the daily. And on the daily, you can see, again, just like all of these other charts, we've already pumped off of the pool. Sorry, you can't capture that. It just happened too early in the morning. And but what you can see is that we are above the volatility pivot, and we are above the momentum pool on the daily. And so if we do close above 30,823, if you're day trading, if you're trading on the day, then if we close above that level, it's going to be a great sign, okay? It's going to be a great sign for this next week. But if we come back under 30,823, then we're just kind of like chopping around between the pool and the pivot. And of course, if we re-enter the pool at 30,614, then we would expect to probably cross it, because that would be a momentum shift to the downside. We would expect to cross it to probably 30,397 at least, and then maybe even retest the bullish control zone at 30,213. But anywhere up here, we are in the bullish control zone, so just don't forget that, okay? Losing that number, then of course we could test all the way down to 28,888. And so, yeah, I mean, I can fairly say as long as we're above 28,888, then at least bulls have the advantage on the chart, okay? Now, where do bears gain control? Around a 26,727. So if you're not trading on those super small time frames, then these are your key levels for just regular day trading. Now, if you're a swing trader, you're probably going to want an update to the weekly. And did I update that one? Yeah, it looks like I did update that one. Yeah, I did. Okay, good. So in this case, we can see that we are above the volatility pivot here on the weekly, which is currently at 29,338. And we are also above the bullish control zone, above 30,352. And we're also above the momentum pool as long as we're above 30,613. So what I would say is, as long as we're above 30,352, things are looking great. Okay, and as long as we're above 30,613, things are awesome. Okay, for the weekly chart. Now, if we push higher, then of course we have a bigger chance of coming back and even doing a reversal to kind of capture some of this liquidity. You can see there's liquidity down here, and usually we fill up some of this liquidity, right, on pullbacks. So are we going to eventually come back to 28,000-ish? Maybe. And as long as we hold that area, you know, like I said, I would prefer to be above 29,000, but, we could dip down like a flash wick into 28,000, and I'm not going to be too terrified. I've been saying this for about a month, right? That 28,000 is kind of like the new 27,000, right? Where we were talking about down here. And so, yeah, I want to be above 29,000. I want to be above 30,000. But if we did a flash wick to 28,000 and just grabbed some liquidity and then kept going, that's not a big deal. Don't let the bears get their earworms inside of your head and rot your brain. This chart is still very bullish on the weekly. Okay, so we did have a bullish close to the last week, and we do have a chance for continuation. Now, guys, if we do just, back out of this a bit, let's go ahead and go to the daily. And then let's close the week there. Let's see if I can show you some of our volatility here. And yeah, so you can see that on a volatility basis, we did have this push up right here on the daily, which then ended up contracting basically sideways. We haven't finished contracting yet, but we're starting to get there. And so we are coming very close to the end of this move. I would suggest that might take a little bit of time to figure itself out. And what could happen is that we end up having, one of these kind of like fake outs to the upside and then a dip and then we go. Okay, so just be aware that there's a chance for a fake out here, not only to the upside but also to the downside, while this volatility is still contracting, and then when it does its flip. Okay, and the flip is going to choose the real direction. Now, the flip may choose to just continue to fall downwards, but every indication right now is that it would go upwards. And again, if we did a flash wick to the 28,000, I'm going to see that as a buying opportunity. I'm not going to be seeing that as a scary thing. If we lose 28,000, then yeah, I'm going to get a little bit frightened. But above 28,000, not terrified at all. Above 29,000, I feel quite confident. Above 30 to 31,000, and it just, it just looks really good, guys. I hope you understand that. You can see that we do have a chance to curl to the upside on the jewel over here, and also the RSI is embedded in the bullish control zone, so things are looking good. We are overheated on the Stokes for quite a while, but we can do that for quite a while. Look at this move, right? Look at this move. Just went sideways forever, right? So we could continue going sideways. We could push up. We could have little dips, but you know, maybe we get like something like this, right? Maybe we get something like this: push up and then pull back down, and then the market chooses its direction at some point. I think that's kind of like what we're coming into, kind of like this moment. And I'm looking forward to a little bit of potentially a push to the upside, as long as we respect those key levels. Guys, let's go ahead and just look at the 6-hour really quick. Let me just clean up this board. And let's look at the 6-hour to see if the 6-hour is telling us anything. Yeah, the 6-hour is super low volatility, but we do see it pulling up here. And so the fact that the 6-hour is starting to pull up quite strongly, and it is almost to the 10%. Well, if we get above 10%, maybe to 15%, I'm going to call that move that we're going to be pushing to the upside. Right now, there still is a chance it's a fake out as long as we're under 10%. And it's not like fully confirmed until we're above 20%. Even then, you can see they kind of toy with us sometimes. But this one wasn't coming off of extreme lows. Coming off of extreme lows and then hitting 20, it's like pretty much that's the move that it's going to be. And so we're just going to wait for this one to pull up. It may take a couple more candles, but then we're going to get more of a confirmed reading on what we're doing here. Otherwise, you could see that we were in the critical zone, the critical bullish control zone, and then we were just in the bullish control zone, and then we retested the midline. Now we're retesting the bullish control zone, and this candle is going to determine whether or not we hold it again or whether we get rejected from that bullish control zone. It looks pretty good, but you never know, right? This could just end up getting rejected. So that's why we have to wait for a little bit more confirmation on this volatility. On the jewel, we can see that we are continuing to push to the upside. So this actually looks quite bullish, and I don't see any negativity on the jewel there on the 6-hour. Let's go ahead and look at the weekly since we already did the daily. And on the daily, on the jewel, you can see that we are pushing to the upside quite strongly there. You can see that on the weekly, it looks very similar to the 6-hour. So just interesting. We're starting to push up on volatility on the weekly. We're no longer just pointed to the downside. So we are going to have to watch this. Sometimes you get a little bit of, fake outs for a month or whatever. So again, like we're not over 10%, we're not over 20%. So we're just not there yet to call it. But starting to see some good signs, because if it's pushing up while the volatility is pushing up, then that could imply that the fuller move is going to continue to push us up. But do we get a fake out to take out some of this liquidity first? I don't know. We're gonna have to find out. But this stuff looks pretty good. And also on the weekly, you can see that we did re-enter the bullish control zone, and so far we haven't gotten rejected. We could easily have a spike up like this, all right, and then get rejected. But that's still going to be a pretty decent move because that's the weekly. So all right, guys, I think I'm going to wrap it up there. I hope that helps you understand what's going on. If we just throw on our EMAs, you can see we're just above everything right on the weekly. So pretty bullish there. Let's go ahead and throw on the advanced EMAs, and just around 33,000, 32,000, we can see this kind of 100 simple moving average that we'd have to contend with. Could be a little bit of a blocker, right? But overall, not too big of a deal. Maybe on the monthly, we see something different. Yeah, on the monthly, we see this kind of, I guess that's the 35, simple moving average around 33. And then on the daily, we just look good. So, on the daily, we could easily check back to 30,000, 700. We could even dip down to 30,240, but on an EMA's basis, totally healthy within that range. What we wouldn't want to do is get stuck underneath 30,500, because on an EMA's basis, pardon me, I'm on the 16-hour. The daily here should look pretty similar. Yeah, pretty similar. So we could check back to 30,366. Now this is a bit wider down here at 29,381. So we really wouldn't want to get embedded under 29,800 for too long, and definitely not under 29,500, because we could initiate, as I was about to say, a squeeze to the downside, okay? And that would be not great. So again, as long as we're above 29,500 on an EMA's basis, just everything's pretty cool. and we could flash wick a bit lower, even to 28,000. We just wouldn't want to get multiple candles, billing down there, because we will end up squeezing to the downside in a more robust and enduring way that would kind of reverse this. So guys, that's your alpha for the day. Stay safe and happy trading.